What are securities in investing? Number 1. Debt securities. These include government bonds, both U.S. Treasury and municipal bonds, corporate bonds, preferred stock, convertible bonds, and include collateralized securities. Examples for collateralized securities are collateralized debt obligations and commercial paper. Number 2. Equity securities. These are instruments that signify ownership interests in company assets and profits. Examples are common stock, preferred stock, and other capital stocks. Company may also hold derivatives such as warrants or call options. Number 3. Trading securities. The entity is holding the securities but will sell the securities quickly. Trading securities are usually recorded as a current asset recorded at fair value. Example, mark-to-market. The unrealized and realized gains and losses are recorded as income. Number 4. Available for sale securities. The entity will hold the securities and will sell when cash is required. The securities are recorded as current asset or non-current asset on the balance sheet. These are also recorded at fair value, but changes in fair value are not recorded as income. Number 5. Held to maturity securities. These are purchased with the intent to hold the securities to maturity. Securities are recorded as current asset or non-current asset on the balance sheet. Also, these are recorded at amortized cost. And unrealized gains and losses are not included in earnings. The realized gains and losses do not exist if securities are held to maturity. Thanks for watching. Please subscribe for more videos.